In this video, we will be reviewing the PrizmaL Gold Expert Advisor by Mr. Vladimir Lekovitzer. Stick around to the end to see if this is a real EA worth your time or just another MQL5 scam. This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. So we can start off here on the sales page to get an idea about how this bot works and a bit more about its various parameters. What is quite neat here is that supposedly this bot won the MT5 Trading Championship in 2008. So that's a pretty good sign. It shows the developer at least is likely well versed in MT5 or MQL5 programming. That being said, market environments are quite different today than they were in 2008, and many strategies, particularly with gold, would have changed pretty drastically. I think the biggest difference is that spreads have gone down enormously since then. So a lot of more swing style strategies likely would have worked better in 2008 for gold. You would have been heavily limited by transaction costs. However, nowadays with some brokers often offering sub 10 pip spreads for gold, I find that scalping is one of the most powerful tools you can use. But if you ever listen to podcasts with some of the more older gentlemen of our industry who've been around for even before electronic trading was a thing, they will always speak to more swing style futures trading, especially if you read their books. Like they're almost all focused more on swing styles because it makes sense. In 1980, you couldn't scalp particularly easily, and even with the advent of electronic trading, it was quite difficult. But essentially, that's my takeaway here. Like a strategy which was valid in 2008 might not be as optimal today for gold in a CFD context. Here as well, he doesn't actually say that it's trading. He doesn't give any detail too much about the particular strategy. However, he's saying that there's two which are running. One is more aggressive, it executes trades more often, and the other one is more conservative. So perhaps one is more of a scalping approach, one is more of a swing trading approach. But what is really impressive about this particular page is his live signal. And here he has an incredibly robust live signal, which has been going on for over a year by now with 1,541% returns. So the magnitude of the returns is simply because he's using a small deposit with high leverage, but the consistency of profitability among so many months is a really good sign. At first, I was a bit curious as to if it's actually a martingale, and the way that you can tell that is usually looking for a detachment of the equity from the balance line. But there's two things here which are a little bit almost counterintuitive. Like here we can see there is a detachment in the equity from the balance. So this would allude to perhaps some sort of recovery mechanism, enormous stop loss, or martingale. However, here we can see that there's clear losses in the equity curve. So there are some big drops down where it loses quite a bit. So I would be more inclined to think recovery mechanism and or maybe an enormous stop loss to kind of justify this. And something else I noticed when I was looking at this, and which is a bit of a red flag, is that he's almost exclusively going long. So if you were to run gold over a super bullish period, primarily going long, you will always make money. You don't really need to be, or like there are caveats to that, but like let's say you just bought gold every day in the morning and you sold in the evening. When the market was uptrending massively and used a lot of leverage, you would have made money simply because more days than less, gold goes up. And essentially strategies which only went long in the past year, when we were in one of the most bullish periods of gold for gold of all time, have done exceptionally well. But just one big caveat there is that it's not that the bot is particularly genius. You could have also just bought a gold ETF with 5 times leverage, and you would have had similar returns, right? So that is one thing which I might be a little bit apprehensive of. He might just be doing trend following with leverage. Nothing wrong with that. Could be a good strategy, but it could be kind of explaining why the performance is so good. So we can go through the trade history just to check here if there's some sort of recovery mechanism being used. There's no aggressive lot scaling, which is a very good sign. So I don't think it's a classic martingale. Might not even be a martingale, it just appears to be percentage of balance with enormous stop losses. So yes, my bets are on enormous stop loss for now, but let's open up the backtester and see. I've taken the liberty of downloading the bot and running a quick backtest here. And as you guys can see, it looks really, really good. Honestly, I'm a little bit skeptical here just on how good this backtest is. I think there's likely some degree of over-optimization. You never know, like, especially because this bot was released on February 3rd, and it had a loss immediately after it was released. So I would venture that there might be some degree of just like curve fitting on historic data, but it doesn't mean it's not a bad strategy. It could just be not as, or it likely won't be as exceptional going forward. And here with the backtest too, we can see that he is going almost exclusively long. So he only took one short to 414 longs. So that means that yes, during a bullish period for gold, he is going long. But one thing to test here as well is to actually test from 2022 onwards, because perhaps we will see some different results. But if we want to take a look at the strategy, it looks like kind of going with the trend with more pullbacks. So like here, for instance, we're in still somewhat of an uptrend, or only going long, period, actually, not even with the trend, but on a pullback. So here he waits for a bit of a pullback and then goes long. Here, perhaps a bit of a pullback down, and long, then a bit of a pullback down, long. So I wouldn't be surprised that there's a hard-coded indicator which is driving most of the decision making here. There doesn't appear to be a clear breakout-based system or level-based system. It's almost more like a pullback with a overarching long trend. But even here, when we have clearly downward momentum, it is still primarily going long with quite a few trends. So it could be more of a, yeah, it's definitely more of a buy on a pullback type system. Now, quickly, let us run a 2022 backtest onwards, because perhaps that'll give us some more insights. Or 2022 to 2023, let's try that, because this was not as bullish of a period. And we'll see if he's still only going long throughout this period. Interesting, okay. Like when you see this kind of equity curve, which doesn't really seem to have any losses and it's just going up and up and up, you should always be a little bit careful. But here we had some losses, which is actually not a bad sign. Okay, let's just let it run. Perhaps we can go through this a little bit more. And yeah, buying on pullbacks. Here, the pullback but not enough, so it kept kind of going downwards. So there are some losses, but I'm still just slightly skeptical of this type of smoothness, right? Let's check to see if he went long again too. Yeah, he's still only going long. Okay. But 2022 is not that bullish of a period, so if you manage to still only go long here and do well, that could also be a pretty interesting time. Let's run a visual backtest now, just to get an order of magnitude of the stop losses. Perhaps that'll give us a little bit more clarity. Okay, boop, 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 boop. Sorry, here we go. Oh, it's not. Oh, I need to fix this here. That would make sense. Okay, we got it up here, and it's just running. There's no indicators in sight. Let's just go through the journal here. They're all market sells. Let me slow down. There's no stop loss. That's interesting. Yeah, no stop loss, no take profit. And there's no trailing stop losses either. It's just enter market, exit market, enter market, exit market. Yeah, market buy, order performed, sell. No trail. Interesting. Okay, so from what I can see so far, this strategy benefits heavily from essentially only going long in a bullish period for an asset. So just keep that in mind that when you look at the live signal, it was just buying something which was continuously going up. So you have to be careful about that. The actual strategy appears to be pullbacks, or just buying and pullbacks. So decent strategy. I wouldn't be surprised if it's largely based on hard-coded indicators, and it's entering and exiting. The gentleman does appear to have experience here. He knows what he's doing. I do think that it's perhaps over-optimized. The smoothness, or it's likely over-optimized, the smoothness of the equity curve as well as the drop-off post-publish are usually telltale signs of that. However, no blatant manipulation or history reader here, so there could very well be a real strategy here. You just need to maybe wait and see a little bit just to see like post-publish how the backtests look. But in order to be able to kind of reconcile the backtest with a live signal. But there's definitely something here. I'm just a little bit skeptical when the equity curve looks a little bit too good. Guys, hope you have a wonderful day and enjoyed this video. Take care.